Imagine a world where 5 years from now, one of the coins you hear about today is the one everyone calls the next Bitcoin. People chase that label. They want the story, the explosive gain, the overnight rise that turns early believers into legends. But the truth is messier. Blockchains don't become household names by accident. They need upgrades that actually work, developer ecosystems that keep growing, real use cases that attract money and users, and sometimes a bit of timing. In this video, we're not promising a moonshot. We're looking at 5 projects that, as of 2025, have real technical roadmaps, active ecosystems, or institutional momentum that could make them breakout stories if market conditions and adoption align. I'll walk you through why each one matters, what to watch for next, and the single evidence-based reason each could be the one people regret not noticing earlier. First up, Solana, SOL. If you followed crypto headlines in the last 18 months, Solana has been a story of extremes. Massive developer activity, lightning-fast throughput claims, and periods of network instability that scared some investors away. But 2025 has been a year where Solana doubled down on resilience and institutional outreach. The network's public roadmap and community blogs show major upgrades aimed at reliability and performance, along with increasing institutional interest that's pushing the chain back into mainstream developer conversations. Think of Solana not as a one-trick high-speed chain, but as a platform trying to mature into an institutional-grade layer, with upgrades that could unlock real demand for on-chain applications and token utility. That combination, speed plus increasing reliability and big money attention, is why many analysts and on-chain observers keep Solana on their watch lists for late 2025. Next, Polkadot, DOT. Polkadot's core thesis is interoperability. It's built so multiple specialized chains, parachains, can plug into a shared security layer, enabling different blockchains to talk to each other smoothly. In 2025, Polkadot has been shipping improvements around parachain performance, scalability features, and developer tooling that make it easier for teams to spin up chains with specific functions, finance, gaming, identity, whatever, while still benefiting from a shared security model. That architecture matters because the multi-chain world we talk about needs reliable plumbing. Projects that solve cross-chain friction at a protocol level could suddenly be indispensable if builders keep choosing Polkadot for specialized use cases. The roadmap updates and parachain growth numbers this year are the reasons DOT is on our list. If the ecosystem keeps expanding and real apps find traction, token demand can follow. Third pick, Chainlink LINK. Yes, an Oracle network, not a flashy new smart contract chain. But oracles are the quiet backbone of DeFi, gaming, derivatives, and almost any real-world data flow into blockchains. Chainlink has been positioning itself as the industry standard for reliable off-chain data delivery. It's the middleware that lets a smart contract know what the real-world price, event, or identity looks like. In a market where on-chain financial products scale and institutions require audited, tamper-resistant data, Chainlink's suite of Oracle services, and its growing partnerships across finance and enterprise, could make it one of those necessary infrastructure tokens that benefits whenever on-chain activity grows. If decentralized finance and tokenized assets expand in 2025, the demand for robust oracles could be a major tailwind for Link. Fourth, Arbitrum ARB and other Ethereum Layer 2 ecosystems. Ethereum's base layer is reshaping itself as a settlement layer, while Layer 2 rollups handle the day-to-day transactions. Arbitrum is one of the largest L2s, and in 2025, it continues to be the prime battleground for cheap, fast, Ethereum-equivalent dApps and token economies. What makes Arbitrum interesting to watch are 2 things. First, developer momentum and real user activity that migrate to L2 for lower fees. Second, ongoing tokenomics events and governance moves that can change supply dynamics or utility. Layer 2s are the place where many retail and developer UX problems are solved, so a breakout in practical usage, more wallets, more NFTs, more DeFi volume can reshape growth expectations quickly. Keep an eye on major token unlock schedules and major protocol launches on Arbitrum. They're the catalysts that historically move price and attention. Fifth on our list, Near Protocol. Near has been building a developer-friendly environment with easy onboarding, low gas friction, and an ecosystem that's actively trying to attract token launches and DeFi primitives. In 2025, Near has been pushing a token season narrative. Projects launching on Near, Aurora, its EVM-compatible side, and cross-chain bridges that make assets portable. That kind of concentrated innovation cycle matters. When a platform attracts new token projects, liquidity providers, and users hunting yield or utility, you can see rapid growth in network fees, staking activity, and overall TVL, total value locked. All things investors watch. Near's focus on developer tools and ecosystem incentives could make it a breakout candidate if a few marquee apps achieve product-market fit. Now pause for a reality check, because stories like the next Bitcoin are rare and often misleading. Each of the 5 projects I named has a plausible path to rapid growth, but the pitfalls are obvious. Market cycles, regulatory waves, token unlock schedules, failed upgrades, or simply competing protocols executing better can wipe out early momentum. This is why watching on-chain metrics, active addresses, developer commits, TVL, and real user retention matters more than hype on Twitter or Telegram. When a project's fundamentals, developer activity, working product, and real users line up with macro tailwinds, risk on markets, ETF approvals, enterprise adoption, that's when you see the quickest and most sustainable moves. So what should you watch next week and next month? First, keep an eye on protocol upgrade announcements and whether they ship without major bugs. Upgrades that improve throughput or security and actually get adopted are catalysts. Second, watch developer and token launch activity. New DeFi or gaming projects, choosing a chain can be a demand signal. Third, monitor large institutional flows and on-chain whale movements. When companies or funds publicly accumulate tokens, that's a different class of attention. And fourth, always check tokenomics events like scheduled unlocks and vesting cliffs. Large unlocks can create short-term selling pressure, even if the long-term story stays positive. Quick, blunt disclaimer. This video is for education and research, not financial advice. Crypto markets are volatile and risky. Never invest money you can't afford to lose. Do your own research and consider talking to a licensed financial advisor if you're thinking about large allocations. Think of this video as a map of interesting regions, not a guarantee that any one route will win. To wrap up, these 5 picks, Solana, Polkadot, Chainlink, Arbitrum, and Near, represent 5 different bets on how the next phase of crypto adoption could play out. Throughput plus institutional interest, cross-chain specialization, Oracle infrastructure, Layer 2 scaling, and developer-friendly token ecosystems. Each has different risk profiles and different catalysts. Your job as a viewer is to decide which story you believe in, and then track the real-world signals that tell you whether that story is progressing. If you want, in the next video, I can deep dive into one of these, show recent on-chain charts, upgrade timelines, and a checklist of real metrics you should monitor before you consider buying. Drop a comment saying which one you want me to analyze next.